Yo.
Hey Chris, how you doing?
Yeah, good. You haven't got a hat on. I don't think I've ever seen you without a hat. I love it.
I got yeah, I normally wear a hat, but I got a little trim, so I thought I might as well shed it.
Yeah, nice man. I can see, lovely little fade going on, eh?
Yeah, mix it up a bit sometimes.
That's it. I'm actually overdue on my chop. My beard's looking a little bit wild actually. My face
you're looking like a Viking, man.
I know, man. That's the plan, isn't it? That's the plan. I don't know if you noticed, but we finally painted the wall.
Oh yeah, I was thinking it's different. Yeah, it's different. Yeah.
Yes, painted. I mean, that by the way, the line is a lot better than what you can see. That is masking tape there. That is masking tape.
Oh yeah. No,
we literally just finished painting it this morning. So.
No, I can imagine. Oh gosh, you need to be proper tactical. Should have done it in blue. You know, CTI.
Yeah, I should have done it in blue. To be fair, I'm not sure. This is but both mainly my office and my studio. This is also our guest room, so I don't reckon I would have got away with the blue.
Fair enough.
How are you anyway, man?
Yeah, I'm good.
We missed you last week. Luckily, everyone was like busy in the comments, which was great. But I missed you.
Oh no! We just flow and we're in the same room, but at least you had an active audience. You know.
Yeah, really good. Really good.
That's quite cool.
Really good. All right, so today
it's been a little slow month today, though. No, don't know about you. But the markets are very, very choppy and weird.
It's not been too bad.
Unless you're trading DAX, that is.
And are you enjoying it?
I'm not gonna lie, I haven't had time to even do a forward test or a back test. Okay. I've got one of my traders, Lawrence, he's actually active in this live streams, and he's doing alright. He's practicing it, forward testing it, he's catching some trades.
Funny enough,
he's using the same strategy that we do, so it's something I'll add maybe in the future, but I need time to proper back test.
Yeah, I'm with you on that. Yeah, so, he was in the chat last week basically saying how much he was enjoying it and how it responds really well to the BLT strategy. BLT, BTL. BLT,
BLT. So just imagine bacon, lettuce, and
tomato. Yeah.
No, obviously it's not that. It's bank level trading.
Bank level trading. Okay, cool. Yeah, so he was saying it's quite good. So yeah, I'm the same as you though. So if I'm looking at a new pair or chart of some kind, I want to do like a full test. I need to see 100 trades, and I normally like to look at 25 of those trades as live trades at least, and 75 back tested trades. I've got quite a cool little way of doing it. So I can normally get this done within 30 to 40 days. So I'm looking for one trade a day. At the end of each session, every single day, I go back and I back test. So I hindsight test. I don't really like replay tools and things like that. I'll go back and I'll hindsight test 3 trades. So every live trade I take, I do 3 trades. That gives me 4 trades. And basically, once I've got 25 live trades, I then have 75 back-tested trades. And it's I don't have to sit there for hours and hours then back-testing. Just every time I take a trade, I have to back-test 3 trades, and I progressively do it. And then that gives me 100 trades that I can then look at.
That makes sense.
But yeah, so I'm doing the same with US 30 at the moment, because US 30, I've tried so hard to get to grips with US 30, and I just...
It's all right, and it's quite similar, because when I literally got into trading, we got taught to trade literally Wall Street and Germany 30. Those two, and it was some scoping course that I did in Canary Wharf, some of you might know. But yeah, that's it, and I'm gonna have to revisit it now that I've obviously developed as a trader 12 years ago. In a long time.
Yeah, well, I just see so many people trading it and so many people saying how good it is. I'm like, right, I'm gonna go, but I've done that classic thing where you kind of like look at the chart and you try and find a couple of positions and you know what I mean? It's not real testing, is it? So I'm going through a testing phase with that at the moment, and I'm just going to basically see what I can find, see what we can do. I say that, so the process that I follow in terms of back testing that I just went through there, that is once I've done an initial test. So I've got to gather data first. I've got to go through a lot of price action. Then if I can confirm via my testing that it's profitable, then I'll go through and do some live testing and things like that. Yeah, I'm not just going to jump straight into it and start live testing immediately for the obvious reasons.
Yeah, fair enough. That makes sense.
Busy in the chat already today, guys. So Anik, welcome Anik. Love from Bangladesh. I love that from you. Have a question about prop firm work? Yeah, fire your questions in here. And we will answer them throughout. So we'll work through every single comment that we get. So fire the questions in here. You know, Anik and everyone else, fire questions into us, fire charts into us. Whatever you want us to look at today, we will look at it for you. We have, you know, time in these streams to go through, you know, charts and analysis, so you can get a good forecast on what you're trading maybe at the moment. And then towards the end of the session, we're going to talk about our topic of today, which is the truth about trading funded accounts. So everything that you need to know about how to trade your account once you've gotten funded. So once you're live, you've passed your evaluation, basically what should you do next? Because you need to change how you've been trading, and we're going to talk you through our best tips for that.
Absolutely.
Lawrence, welcome.
Nice, Lawrence in the building. Muller, I want to be the next funded trader. Awesome. I hope I will get good opportunities right here. Yeah, just show up, commit, and ask questions, Muller, and hopefully we can help you accelerate your progression as a trader.
You're definitely in the best place here. This is exactly what these sessions are for, is to help you on your journey to becoming a funded trader. That's why we're here. That's why Diego and I have been asked to put these live streams together, is to help you guys. So, you know, we're getting big. Do you know what was really nice, Diego? It's getting busier. Like,
is it getting busier? Okay, that's fun.
It's getting busier.
Much better.
We're getting like more people every week, which is nice. We did like 120 people last week, which was good.
That's all right. That's all right. Yeah,
where's Boss Lady?
Oh, yeah, Boss Lady was she there as well last week?
Yeah, she was there last week.
Awesome. Yeah, when there's more engagement, it makes it more fun. Yeah. We both get more enthusiastic, and it's just you get more from us rather than just a dead chat and then us showing the charts and giving you some value anyway. So just everyone, if you could just get involved, and whether it's a silly question, trust me, we'll make it fun.
Yeah, there's no silly questions. Ask away. I've just seen Anik's question. I'm going to look up. So there's some stats on this somewhere, isn't there?
What's that? Why many traders fail on their funded account after passing evaluation? Fair enough. Isn't it something like 90% of traders fail within the first 90 days or something like that? I can't remember.
So 4% of traders on average pass their prop firm evaluation. Only 1% of traders keep their funded accounts for a reasonable amount of time.
Yeah. And
that's exactly, Anik, why we are here today, and we're going to talk through why people fail these evaluations. 99 times out of 100, it is human error. In fact, you know what? 100% of the time it's human error, right? Because if you've passed your evaluation, you're a good enough trader to pass an evaluation. You've done something wrong. You've messed it up. That's the bottom line. There's no other way around it. You've messed it up. Simple as that.
Absolutely. I think probably one of the most obvious one, Anik, and for all the other traders, is that obviously when you do a challenge, you essentially naturally do want to increase the risk a little bit, whether it's 1% or 2%. That's more or less what traders do. It's around 1% and 2%. Then when it comes to your live account, you should really knock it down to 0.5%, 0.25%, and that's how you keep it. But traders, they will probably continue doing 1% risk. And when they hit a drawdown and they lose even just 3 trades in a row, that's it. You're like a third way there from losing your account. Your next trade now is going to hit you psychologically so much that if you lose that next trade, you're now 4% in drawdown, right? It's just going to keep building. And then you're thinking, all right, one more trade. But if I just hit the next trade, I might go to
just one more.
Boom, you're halfway to drawdown. You know, so traders, you need to be a risk manager first before you become a trader. Just knowing when to decrease risk and knowing how often you go into a losing streak, as you know, and just play your numbers, right? Don't do 1% risk if you sometimes go into a 7-8 consecutive losses trading losing streak, right? Imagine you're doing 1%. That's just going to mess you up. If you know that you hit a losing streak once every 4 months, once every 3 months, just be prepared for it, right? Just keep your risk minimal, where if you do go into a losing streak at least do 0.5%, you'll only be down around 3%.
Yeah.
You go into a losing streak, even less, because you'll be reducing the risk after your third trade by half, and then you just keep it down below 2%. That's how you keep it. But traders don't do that. They just start increasing the risk and just moving the risk around. But that's a big reason, to be fair. That's one of the big reasons that traders don't really maintain it.
Yeah, agreed. Diego, that's beautiful. I know that the editor's going to be very upset because you're blurry, I'm afraid. I think you've moved out of center of your camera and therefore you've gone all blurry.
Yeah, I've had issues with it today. So
hang on, where is he? Come on, it's not doing it. Why is he not focusing on you?
I don't even know. I literally tried to switch off the camera earlier and it didn't.
How strange. It was fine a minute ago.
It was. All my camera's fine, so it might fix itself in a minute.
Yeah. Let's see if it focuses up on you. Well, whilst we're waiting for Diego's camera to focus up on his beautiful face, I'm going to jump onto the charts because I've just seen, I think, a couple of potential opportunities. So we like to obviously show you guys trades as we take them. Why can't I see my window? Hang on.
Yeah, do that, and then after I'll jump on Match Trader. I like to cover Match Trader.
Yeah. Are you set up? Are you ready to go?
I've just got a demo account to show traders just to walk through and execute some trades just for fun. And I do have a Match Trader account, but with a different firm for now.
Okay.
A different account.
So I've been waiting for this move on the DAX all morning. Unfortunately, I am now looking like I'm going to miss this entry. So I have a specific entry model when this sort of move with no kind of pullback happens. So I won't enter in this sort of stuff. There's no confirmation in that move. I've got bearish momentum. So I've got bearish momentum here. So bearish momentum, failure to make a new high, equal lows here. And then we've just broken it. So look, I'm not going to get into the trade until I get some clear momentum coming into the marketplace. So now I've had clear momentum. I've got imbalance here. I've got rest and liquidity here. So if I get a move down, I can take a trade up from there. But it looks like it might just be shooting off without us, unfortunately. Now, there is an entry model that I use in these moments, which hopefully we might get, which is basically a pullback move and then a manipulation move. And then we're waiting for, a push up. And then, I have to place a bit of a tighter entry on this. It's a bit of a riskier entry like that. But it can work out and play out very, very well. And, coming up to our liquidity point, we've got potentially a 5R. We get something like that. But I would always prefer to have an entry around here where I can place my stop below that, which will hopefully become a protected area. Now, at the moment, this is just an initial push. So whilst we are favoring longs, this doesn't actually give me 100% confirmation that we are going to be going long. So, for me, I will take a risk entry here, and that is considered a risk entry because it's just one initial push. But it's that second break that would really confirm that move for me. And then I can get into a trade like this. And that would be, my preferred entry, because now I've got a confirmed move with confirmed structure. So that's kind of what I'm looking at on the DAX right now, and just to kind of explain to you why. So we had, obviously, I'll just take this indicator off just to tidy up the chart a little bit. We had this, these moves coming into the marketplace here. We had a shift down last week, and then we had a big old shift bullish towards the end of the week. We are overall bullish on DAX simply because we're continually making new highs. And we've had this now, this kind of cupping shape, this reversal sort of pattern with clear bullish structure now coming into the marketplaces. We're making higher highs and higher lows, higher highs and higher lows, just basic structure really, which is why we are thinking and hoping that we're going to be ultimately going long. There was an entry at on Friday at 6:30, because in hindsight you can see it there was an entry there. It's outside my trading window, so I wouldn't take that. And we had a position on last week which obviously hit profit target today. Sadly, I wasn't in this position, although the trade and the analysis worked out. I closed out on Friday. I'm not a big fan of holding over the weekend, just in case. I don't know if anyone saw gold. You seen gold yet, Diego?
Yeah. Brief day. It's quite choppy, but I'm still I'm still quite bullish on it. I don't think it's officially reversed yet.
The gap overnight. So that's why I don't like holding over the weekend, because we had a 1,262. Is that? Oh no, sorry, 126 pip gap on gold over the weekend.
Oh la la.
Yeah, big. So that's why personally I won't hold over the weekend. But shame, because it looks like we probably had a gap on the DAX as well. It's just this chart has filled in that candle. I don't think that in maybe let's have a look. No, yeah, so that we had a gap on the DAX as well, as you can see there. That's just a fill. Some brokers, by the way, guys, will fill in candles. So forex.com, they fill in candles. They fill in the gap. So just you have to be aware of that. Drop down to the 1 minute, and if it's moved like a million pips in 1 minute, then it's kind of get that idea. So yeah, so look, ultimately in this example, I would have done all right out of it. But imagine if it had gapped that way and opened the market there, and I would have lost twice my stop. So that's why I'm not a big fan of holding either overnight or over the weekend, because you can it can do you over basically.
Yeah.
So yeah, DAX bullish overall. I'm expecting higher prices. I'm expecting a new high. Nothing indicates to me. I mean, I was bearish that week. I don't think I've got any positions out of there, but I was bearish that week. I think we got short here, maybe. It's not on the chart anymore, but I think we got short there. Anyway, overall, this is a bullish chart. And whilst I will trade it bearish, I will always understand that those are short-term bearish moves. And the likely outcome is that we'll continue bullish, because all of our higher time frames are bullish. And until the higher time frame shifts, like in these sections here, and these sections here, and these sections here, but even there, you can see that they're short-lived. They're short-lived pullbacks to then ultimately go long, which is really should be the way with indices, right?
Yep.
It should always be long overall, because hopefully the economy and the businesses are growing. So yeah, Euro USD. Potentially we have a position here. It's a little bit higher than I'd like to see. If we look at the dollar right now, the dollar took out that, I think it's a weekly level. Yeah, dollar took out, is it a monthly level? No.
Do you think the dollar's topped? Or do you reckon it's going to climb a little bit? Or
I don't know. I think the election is going to play an important part on this. If Trump wins, then the dollar's not topped. If Trump loses, then the dollar probably is topped, because I mean, I don't think Trump is going to lose, but if he does lose, I don't think that's going to be very well. I know that's not going to be very good for the dollar. So potentially a little bit of a pullback whilst we're waiting for these election results. But yeah, we definitely took out a key liquidity level, and the reaction to this section here now is really important. Okay, how we react to that section is really, really important, because if we clearly pull down from here and we create new structure, clear new structure, and then continue pushing down, then we'll be short for a little while. My expectation, however, is that we're going to find some sort of support in here, and then tag some sort of liquidity, and then push back up for another half. That would be my expectation, but that's me just using pure liquidity structure. Ultimately, the order flow is bullish right now. We're taking lows and making new highs, We took some internal liquidity here. We failed to, actually didn't fail to make a new high. We did make a new high here, but we also grabbed liquidity, which has pulled us back down. So technically we're still bullish, which is why this section of price here is really important to us. What happens in here, in this zone in here, is really, really important, because depending on how we react to this level here, will determine where the dollar's going to go next. I am kind of sort of eyeing up a long position on here. If I were to be taking it, I'd be taking it something like this. It doesn't really give me the returns. I can get
bad.
Say again?
That's not too bad.
Yeah, I can get a bit out of it, but by the time I've got my confirmation entry in, if I were to frame that engulfing now, which would be probably favorable, then we can get an ED2 out here. So that's an option for sure. Got it. Move that here, we could put the stop there, and then we could 2R up to here. Yeah, I mean, it is a bit messy. It is a bit messy, but it does kind of make sense. What we're doing on the dollar, we've got a bit of a pullback. We are way above. Yeah, it's just, you know, we could reverse at any point from here, which makes me just a little bit nervous. But worth to be taking it, something like that. You know, I can get out of the marketplace pretty quickly. Do I like that? Do I like that position, Diego? I don't think I do.
No.
Internal liquidity.
I don't think. I reckon it's gonna drop a lot lower. I'm also looking for a long based on Elliott waves.
Yeah.
Yeah, I wouldn't. No, not my cup of tea. I mean, based on my analysis that I had a brief look at.
The thing is, we've got liquidity up here to the left, which ideally we need to take something out of. We've got all the block up here. Oh, I don't want that one. Got all the block up here. Let's just frame it up properly. Where have we got it? Is it 30-minute one? 30-minute one. Okay, let's use that section there. Okay, so that's our order block up there. We have got liquidity generated. So it could be a move. It could be a move. Does it give me the entry that I want though right now? That's the big question. Does it give you the entry I want?
I think because you're still contemplating it, it's not a trade that's resonating with you where we're screaming at you.
Yeah, exactly.
It doesn't need time to develop. I think if anything, if you look at your M15, where it took at that high.
Yeah.
Not that one, on the current price action.
Yeah. Yeah.
Right, took at that high, right? Then obviously the low that engineered that high would probably be a good area to get involved in a long.
Yeah. And we've got, you know, big imbalance up, big imbalance down as well, which, you know, that often will indicate a reversal. There's a big chunk of cash that's come into the marketplace, right? Big chunk of cash is pushed up, big chunk of cash is pushed down. So we've got that double imbalance.
Yeah.
That's often a reason for a reversal as well. Yeah, I'm going to sit it out. I'm not going to rush it. I'm not going to force it. Germany 40 just might not be my day today. I like
how it moves though.
Say again?
I like how it moves.
Germany 40, yeah. When you catch it, it just moves really nicely. Like I got into that position there and it pushed up really nicely. And then it kind of mucked about on Friday annoyingly. I came back around here in the end. But it just again, same sort of pattern here. See that little pattern in there? Imbalance down, imbalance up. That's a really clear liquidity move. That's the sort of liquidity moves that we're looking for, right? Because it shows that there's clear momentum pushing it down, clear momentum pulling it back. You know, that's my perfect liquidity sweep. As a minimum, I want imbalance pushing back up. But you can see here again, just before that move, imbalance down, imbalance up. Okay, you've got two imbalances sat in here. You've got one here, and you've got one next to it here. You've got two imbalances. So I'll draw this one out just so you can see it. One there and one there. You know, that is, for me, that's my clear liquidity move. Sadly, on this chart, it hasn't actually taken the low. It just, you know, it's just really impulsive coming back up. But yeah, so look, ultimately bullish on the DAX. If I can get a pullback here, hopefully in session we can find a trade there. Euro USD, I am technically bullish at the moment, but I'm in an area where we could be reversing from, so I don't really want to force the trade just in case. Either way, if this was down here, so if this
any day,
was down there, I'll be into that all day long. So I could buy up from there, but the fact that we're so high, if I draw out, I mean, this isn't a range because it didn't really create a new structure, but if I just draw the range on, we're in that, we've just tagged into premium pricing now, so it makes sense that we might actually get a reversal. we've taken out liquidity here on the DXY as well. So this actually might be setting up for a long. It might just now pull back into here, take out this liquidity, and then shoot back up. So it could go either way. And do you know what? If it could go either way, I'm not trading it. Simple as that.
Yeah. It's not really, is it?
Liquidity's been taken fast as well. So I'd actually, do you know what I prefer? I prefer some structure to go into here, and then we can get into a position like this. That's what I actually prefer right now, because I've got a liquidity move. I've taken out liquidity. Overall, I'm bullish, as we know. So this technically could be a short. So I'll keep an eye out during the session for both options, and just see if we can find something. The only thing I don't like about this is we haven't really taken out any liquidity other than like internal liquidity there, and then tanked into this imbalance. I don't really like trading off imbalances, but we have tanked off that imbalance. So, you know, that is definitely an option. Let's see what happens. I'll let you do some analysis, and I'll keep an eye on this throughout the session.
Cool. Let's just answer some questions in the chat real quick.
Cool.
So we've got trade zone. Why am I comfortable in long and short? I still got the issue to this day. So what I personally do, there's a few reasons for that. What I personally do will serve your problem immediately, Mr. Trade Zone. If you press Alt-I, if you've just got a normal PC, you can flip the screen around to the direction where you're comfortable with. The other reason could be that you probably started trading and you were just long in the market a lot, or you've just subconsciously taken more longs and shorts. That's all it is, right? So if you just flip the screen when you're taking a short, you're going to naturally feel more comfortable. That's something that I do. So that would hopefully solve your problem, your issue. Anik, one more question. If a trader faces a losing streak, then how does he come over it? If a trader, I kind of covered that earlier. Just reduce the risk after three losing trades. Stop trading, take a break, do some back testing, do some forward testing, get some confidence under your belt, and then go back into your actual trading and start your risk very, very small. I'm talking remove 80% of what you normally do in terms of your risk and start trading that incrementally, slowly as you get back into it. But most importantly, back test and forward test the live markets, but don't take any live trades. That's how you can slowly get back into recovering your losses. And then that's it. I don't think there's any more questions.
If you're as a trader, you're even asking yourself that question, you haven't gathered enough data yet on your strategy, and that is a really common. You know, it's a theme that I talk about a lot, and it's a theme that comes up on these sessions a lot because it fixes so many problems for a trader. But basically, if you had 500 back tested and forward tested trades, let's just say, so you've been back testing your strategy for 6 months, and you had 500 trades, like as in good trades recorded, some of them live, some of them back tested, and you knew that you had a 70% win rate or 60% win rate or even a 50% win rate and an average profit of say 3 to 1, okay, you would never worry about losing streaks. You would never worry about whether your strategy is going to work the next time you take a trade, because you'll have the data and you'll have the information to understand that it will. So normally, if you're asking those sorts of questions, you've still got work to do on your strategy. And that's not just writing down the strategy and coming up with a trading plan. That's just step one. Next step is you've got to go through a vigorous testing phase and gather data. And sadly, the process of that means that you'll find refinements. And once you find refinements, you then have to update the trading plan, and then it starts all over again. And like a piece of artwork, your trading plan is never truly finished. There's always refinements. There's always new ways to update it and get it better. And each time you make changes, you've got to start that testing phase all over again. So it's a constant evolution process. Basically, your trading plan and your data is like a brain. I often use this analogy, right? It's like a brain. So if you're working a new job and maybe you're working on the phone to customers and your job is to sell them a product, okay? Over time, you get better at that job because you learn how to handle the objections and you learn what objections work and what objections don't work. And through trial and error, you work out basically how to be good at this job. That's effectively your brain coming up with a strategy, and then going out and testing it and gathering data and logging that data on a spreadsheet. But instead of it going on a spreadsheet, it's going in your memory bank, right? And that's how you get good at the job. With trading, we don't have to memorize it all. We can write it all down. We can document it all, and we can gather data, and then we can go and revert back to it. So testing is so important, and it honestly, it solves almost every single problem as a trader, I find.
Absolutely. Yeah, 100%. Couldn't have said any better. Some more questions actually. They're firing up. That's great.
Oh, it's busy at the moment. It's busy. I love it.
Yeah, we're good. We're good. After I show the match trader, what's the maximum number of trades you would recommend in a day? Everyone's is a bit of a unique experience, depending if you're a swing trader, a precision trader, a scalper, or a day trader. From me personally, if I've got, again, everyone's different. I take around 1 or 2 trades a week, and that's it. But on the trading days, I would take 2 trades, and that's it. I'm done. That's me personally, right? But again, it depends. If you're a scalper and if your strategy says you're taking 5 to 10 trades a day, then you take 5 to 10 trades a day, right? But everyone's different. I don't know about you, Chris. How many trades do you take a day? You normally take
one a session.
One a session is enough, right?
2 maximum. Like if I see, look, I only trade 2 pairs really. So I have GU as well as EU, but I only ever trade 1 of them, and I have the DAX. Yeah. I'm looking for 1. I find like my bad days, I've always taken too many trades.
100%. I mean, it's like if you take a trade, right, you've already done all the hard work. You've done your analysis. So you should really take a win if you're correct. And if you take a win, you should be done. Do not trade. Do not trade if you take a win. Now, if you take a loss in your first trade, there is still hope because you're confident with the point of interest in the area that you're going to be right. And normally it goes to your plan B or whatever, or your extra confirmation, and that your second trade should be a win. If it's a loss now, if you've taken a loss and then a second loss, that means there's a good chance that your whole analysis is basically flawed and is invalid. So 2 trades max should really be what the standard recommendation.
I remember hearing someone like Raja Banks or someone like that saying that basically that your brain can only comprehend 2 opportunities a day anyway. As soon as you start looking at more opportunities, you start blurring the lines. So you'll be able to take 2 trades a day, and then after your 2 trades a day, you then start making mistakes and start forcing trades because you've lost and then you've lost. You've lost twice in a row, and now you're in a position where you're trying to recoup those losses. It's a great little hack that if you lose twice in a row, just be done for the day.
You have to be done. Even if it looks so sweet and juicy and you're like, nah, I need to make the money back. This is what separates a trader with a gambler. Just be very careful in that thin line. Yeah. Be very careful.
It's impossible to get out of the mindset of I'm going to recover my losses. And I've done it. I've done it recently where I've been in drawdown for the day. I've taken a trade that's played out well, and it's got to my target, and I've questioned whether or not I take the position. And I have to remind myself, nah, you've got to take the position. I don't care if it's covered your losses or not. It doesn't matter, because if you don't do that and it reverses on you, now you're down 2. Whereas if you take it, it might only get you back up, I don't know, to minus 0.25% instead of minus 1%. But at least you're only minus 2. And I've had that so many times where I've got greedy. I'm like, right, I want to make profit today. I want to get back to break even today. And then you end up losing that trade or getting a break even that trade. And you're now either 1% down or 2% down. And you kick yourself. You're like, why didn't I just take the profit when I saw the profit? If you're in drawdown and you can take some profit, my advice to you would be just take some profit. Because whatever that profit is within reason is definitely going to be better than whatever drawdown you're in right now. That profit is going to reduce that drawdown, and that will always feel better than if it goes the other way, which it can do, and it often does do if you're being greedy.
100%. Yeah, spot on. Yeah.
I love this question. I get this question all the time, every single day.
I've got an analogy for it. That's like asking. It's like asking Cristiano Ronaldo after he just finished a professional football match whether he still follows his nutrition after the game.
Yeah. Or still stretches his muscles.
And that's it. So yeah, we still journal.
Yeah, every single day. Because go back to that point of data. that data enriches you as a trader. Every single trade that you put shows that, and hopefully you're using a journal which works out things like your strike rate and win rate and average win percentage and things like that. So hopefully using a good journal. Like I think that's where a lot of traders go wrong with journals, is that the journal has no intent. The journal has to have intent. It has to provide you with data that you can use. It has to show you your win rate. It has to show you your average win percentage. It has to show you your trade account balance. Although you can see it on MT5, you need to see whether you've gone 5 trade losses and then had 1 big trade to recover yourself, because even that in itself will tell you, actually, maybe I'm trading at a little bit high risk at the moment. I've lost 4 times in a row and I've had to get a 5% trade to get me out of that drawdown. Maybe that's too risky. Do I lose once or twice in a row because then I'm only shooting for 2% a trade, or 2 to 1 per trade instead of 5 to 1 per trade? Every single statistic that your journal gives you should give you data that will make you a better trader. That's my thoughts on it anyway.
Yeah, no, spot on. I'm very similar. I'm also you need to have the mindset where you want to journal so you can find out what the hell went wrong.
Yeah.
Right. If you're not motivated by that, and you just journal because people say you have to journal, and you don't really care, or you don't have the energy, or you're not motivated, or you're not disciplined to journal, then you're gonna struggle. Right.
Yeah.
But when I journal, I know you're the same, Chris. You get excited because oh my days, you're gonna improve as a trader, because there's something wrong, but you just don't know what it is. Once you figure it out, you've now gathered the data, and that's it. It's in your ecosystem, it's in your hard drive, and the next time, not to make that mistake again, right? It's all just a mindset.
So it always comes good from it, right?
Exactly. Okay, let me check out Match Trader for. Yeah, I mean, who's in
Trader?
What's that?
I've still not used Match Trader. A few of my students use it, and I've heard good things about it. I've still not used it myself.
It's pretty decent. I've been using it for a few months. And I just released it literally the other day, but it's really straightforward. It's really, really cool.
Definitely. Also, we need to talk about this. Because people don't know. CTI back in the US.
Exactly. So any US traders, I mean, we're welcome any US traders, especially if you sang on with Match Trader, which is fantastic news for any American traders.
Shall I see if we can find? Let's have a quick look. Because I think there was an article on it, wasn't it? And we can talk about it when you've done your analysis.
Yeah, let me cover Match Trader first. So where are we at now? Let me share my screen. Share screen. Go ahead. Boom, boom, boom. There we go. There we go. So Match Trader, you should have your logins to CTI and your account details here. I just done a tutorial video on this with this little demo. That's why it's in the negative, because I was testing the platform. But in a nutshell, if I just do my analysis, and let's just go on Euro, right? On Euro USD. This is quite cool. You can flip between Match Trader and TradingView. So this will be TradingView. You can use your full analysis and the indicators, but to execute trades, obviously just untick TradingView, and then you'll be able to execute the trades.
Yeah.
So if I just go on this real quick, just do a brief analysis on Euro. Let's go on weekly. So you can have, nothing really. Hold on. Oh, it's almost there. It's literally flirting with this trend line. What's that?
What time frame is that?
Oh, that's the weekly.
Weekly, okay.
That's the weekly, but now I need to fix it up a little bit. So I've still got room to drop. That's why I'm still bearish on Euro, but I do see a potential long, and that long happened obviously at 3 a.m. in the morning last night, but nothing for me. potential long now, but it looks like the short looks like the one, to be fair. They'll be with the trend.
So when you do that top line, I've always wondered this, why do you draw the top line from, so that top line where the left end of it is touching, why do you do it from that high and not the clear high above it?
Is because I only trade the pattern that has the highest win rate with my strategy, which is a wedge.
Yeah. But
now,
why that one, the high?
Because if I do this one, it's not going to be a wedge anymore. It's going to be like a triangle.
Oh, because it's a straight pattern.
It's straight, yeah. And I just do wedges. And if I were to do, let's say, a high from here,
yeah,
it comes an expanding, which I don't trade. Right. Makes sense. I just automatically, because of the pattern recognition, I knew it's there.
Yeah.
So there's my wedge. Obviously looking for the short will be here somewhere, but just so you guys could see how it works, I'll do a limit order in this area real quick with, let's just say, a stop loss above that high. So I'll flip it back, or hold on, I'll just do this. So limit order there, stop loss there, include the spread. So what's this? 2.5, I round up to the nearest number, and then I do 14, 15, 2 pips, and then 2 pips this way, 17. And I know it's coming down to this trend line, so minimum this low is, there's a good chance that will get hit. That'll be my trade. Double click on this, and I do entry, copy the entry price, go back to the actual chart on Match Trader. What's the word? It's H1, and then I do limit order right here, new order, pending order. And the lot sizes, obviously you calculate that in your own time. Let's just do 10. Boom. Price, pace, there's the limit order, and then that should be enough, right? So once I do that, sell limit or stop loss, you can add a stop loss right there, so 2 pips above.
Nice.
And then TP at the start of the pattern right here. So there's a potential trade, and obviously you just execute. Obviously you calculate your lot sizes, and I'm not going to have the time to do that now. So
is there not a tool inside that does it for you?
In here, not really. I've never tried to look into it. I mean, I'll have to go on like a different website to calculate. Yeah. So I just can't be bothered to do it.
Oh, it says in the bottom right, 0.97%.
Okay, wait. So this is.
Oh yeah. So funny enough, C-Trade do the same thing, where basically it doesn't calculate the lot size for you.
Okay, fair enough. So yeah, so you can get around.
It'll tell you what your bottom left. So your stop loss basically hits that stop loss.
Oh, that's quite cool. Yeah, exactly. Yeah, I've never used that. I've had to.
So you can work it out by basically you'd add in more positions to get you to your 0.5 or 1%, whatever it is.
Yeah. See, that's way better than MT5.
Yeah, right.
So cool. So
I still don't understand why MT5 doesn't build it in. It doesn't make sense to me why MT5 doesn't make sense. Yeah, exactly.
So 0.53%. Let's just do. We're doing a challenge. So you want to do. Oh no, but there you go. Insufficient funds. I think that's because of the leverage. So you need to be, I mean, let's keep it simple, 0.25%. I normally do 0.23% or 22.
Yeah.
So if it hits the stop loss, includes the spread, at least you'll take a full 0.25%. Same thing when I do 1% risk, I'll do 0.97%, including the spread and whatnot. So there you go. Boom, boom, boom. Sell limit, confirm, done. So that's done. That's a potential sell limit. And since I know there's a good chance it's going to go long, is there a trade to get involved? Let's go back to trade and view. It's going to go long. I mean, I just don't know. I can't really find a setup for now. Just have a bit of fun and actually do an execution. Nothing really that I can see here. No, there's nothing that I can see here, to be fair. There is going to be a trade. Most likely it's going to be approximately above this area. and just below this liquidity. Okay, so I can take this one for fun. Why not? So buy limit there. 5 buy limit, and then right there. There we go. Touch buy limit. Although, again, don't take this trade, everyone. It's not financial advice. I'm just showing you how to use the platform. Probably an invalid trade, just so you know. Okay, so copy. So I'm going to copy the entry price. Obviously, I took this indicator from the long and the short positions, but once I've copied the entry price, just untick this toggle, and then we do a pending order. Paste it here. There we go.
Right. Yeah.
Right there. And then we do the stop loss, which should be stop loss. There we go. It's right there.
Nice.
And then that's way too. Oh, well, obviously, hold on. Let's go back to the smaller time frame. There we go. And it's just a few bits below this one.
Did it give you the seconds? Was it just
What's
minutes?
that?
Does it give you the seconds chart, or was it just the minutes?
Just a minute.
Okay.
Unless we go on the. No, just a minute, to be fair.
Okay.
Okay, just leave it there. And the risk. Whoops. There we go. And on, off, stop loss. Boom. Put it 0. Just below 0.1% risk, and then TP. TP we can just add it on after. Price, boom. Hide.
I've taken that EU short, by the way.
Nice.
So that's a buy limit then you're setting up, is it?
Buy limit, yeah. And for a market order, you just go market.
Yeah.
And just do something small. 0.1. The short definitely looks like a $1. Stop loss. Stop loss.
And you just drag it, yeah.
And then sell. Confirm. Boom. Nice. There we go. That's in. And then TP. Take profit. Most likely that low.
Yeah.
Done it. There we go. Oh, orders. Cool. That's about it. And let's get
it looks so nice to use.
Yeah, it's quite smooth. Definitely quite smooth. And obviously, if you want to change the symbols, just click on cable, euro, pound. Dollar yen, I don't really trade it anymore, so I'm going to untick it for the favorite.
Yeah.
And then you just that's it. I don't know where's. Oh, sorry, you untick it here. There we go. Let's look at Germany 30, and then we can go on to the article you're waiting for.
We're running out of time. We've only got 10 minutes, and we've got to cover our topic off.
All right, cool. Let's do that then. Cool. All right, I'm done
then. So, topic of the day is the truth about trading funded accounts. So, if you were to say right now your top tips, you've got funded for the first time, and look, this information as well, just so you know, guys, comes from the fact that me and Diego, when we passed funded accounts, we have probably, or I definitely have, we have definitely blown those funded accounts. not long after we've gotten them funded. So, you know, firstly, there's nothing wrong if that happens. That is kind of like part of like the ritual of getting funded, right? You've got to blow your live account at least once.
Mm-hmm.
But these tips that we're going to give you today, they come from the lessons that we've learned. So what would be your number one tip? You've just got funded, you've spent however long passing your evaluation, you've got it through, and now you're in a position where you're funded. What do you do?
I think it kind of goes before that. You need to be treating your challenge as if it's your live as well. You might just it's just the same sort of mindset. So you still want to take the high probability A-star setups. You just want to adjust the risk a little bit. And that's it. You just continue doing what you're doing. You should still be journaling your trades. You should still be doing everything that you should be doing when you're funded. Nothing should really change. The only thing that could change is that you may increase the risk on a challenge. That's about it. But you should still remain the same, right? But obviously, as time progresses, and you make a withdrawal, that's different. When you're having multiple funded accounts, I'll definitely recommend rotating your accounts. So if you take a trade on funded account 1, take it on funded account 1. And if there's another setup coming that you've waited for, then take it on that account, right? Because if you go into a losing streak and all the accounts is connected to one account, then if you blow that funded account for whatever reason, you've lost everything. But if you're constantly rotating the trading accounts with your entries, then you're diversifying essentially.
Yeah,
that's something I'll definitely recommend. It helps a lot.
Yeah, I mean, I think it's really good advice. I think it's something that I probably should do, really. One of the things I used to do to spread my risk as well is I used to split pairs over different accounts. So I'd have an account for a few accounts for like EU, and then I have an account or a few accounts for whatever else I was trading at the time, and that was quite a good way to spread risk. But spreading risk ultimately is absolutely what you need to do. You're probably going to be trading your evaluations a lot more aggressively than you would do your live funds. Well, you should be, because evaluations, if you fail an evaluation, you can just buy another evaluation, right? Unless you're not in the financial position where you can just buy another, you probably need to be a little more careful. But what a lot of traders will do is they'll trade their evaluations more aggressively than the live accounts. That might mean that on a bad day you go 2% down in risk. You wouldn't ever want to go down 2% on your live accounts, because you get yourself close to blowing them all together. So, personally, what I would do is I would halve my risk. That's the first thing I would do. As soon as that live account, good advice that I was given was halve your risk. That's really, really important, so that you can take that risk off the table, and just make sure you can protect that capital, because your job now as a trader, once you're funded, is to protect that capital at all costs. You can't ever come close to blowing that account. You need to make sure that you keep it. When you then start getting into accounts that have like 6 numbers in them, so hundreds of thousands of dollars of funding, you might even want to consider a third of the risk, or maybe even a quarter of the risk. Because remember, you're doing, let's say you're good at passing evaluations, you're doing 10% in 2 months, for example, or 10% potentially in 30 days if you're really good. You don't need that when you've got $1 million of funding. You don't need 100,000. I mean, you might want $100,000 a month, but you don't need $100,000. You need to keep those accounts. That's what you need to do. So my one bit of advice I give is, as soon as you get funded, is take a bit of a break, maybe a couple of days off, enjoy the weekend, and then go in logically and cleverly to saying to yourself, right, I'm just going to trade at half my risk, and focus maybe on something else. One of the good things that you can do is you can take out another challenge, another evaluation. You can link that up to your live account. You can trade your evaluation at full risk, and you can tell your trade copier to half the risk, so that you're trading half the risk without even realizing it. That's quite a good way of doing it, I think.
Yeah, 100%. Also, when you get funded, some of you, I don't know who, but you might slowly start shifting away from what got you there in the first place, which is being just following your rules.
Yeah.
Obviously, when you're funded now, all of a sudden you're thinking about money, which is natural as human beings. So you kind of just have to really center yourself, right? Just center yourself and just stick to the rules, one trade at a time. That's one trade at a time. You're focused on that. You've made a loss, or you've made a win, but then that's it. And then you're preparing for the next trade, and you're not thinking about the money. If you can just remove the money aspect, it's going to help you a lot. It's going to help you a lot.
Yeah. That's the thing, isn't it? You're looking for a payout ultimately, aren't you? So you're chasing that funds, and I've been there before. I remember having like my first $2,000 payout, and I was looking at the numbers, and then I saw the next opportunity, and I was like, oh, that looks great. And before I knew it, my payout ended up being like $800. And I've been there before where I had potentially $2,000 coming in, and I ate into it until $800, and I should have just stopped trading. I was only like 3 days away from payout, and I should have just stopped trading. Another tip as well is set yourself a target. Set yourself a target. Get to that target, and when you hit that target, just stop. Just stop. Just like you should have a daily target and potentially a weekly target or whatever, however you want to do it. But set yourself a target. Let's say it's 5%. Once you've hit that 5%, just stop and come away from it. And it teaches you control and discipline. That's really, really important.
100%. Also, if you're say, let's say you're max funded with CTI or whatever prop firm, and you're managing, let's say 400k, right? Which it's very doable. You should, my personal advice, try to keep it below 9k. There's a reason for that though, because if you've got 400k, that's just like 2%, just over 2%.
Yeah.
The chances of you receiving that withdrawal with no silly hiccups or made up bands or whatever nonsense the prop firm can come up with, even though CTI obviously they've never failed a payout. Keep it below 9k. You got no problem. You're below the radar. Trust me on that one, right? If you make, let's say 5% on a 400k account, what's that? 20k, 4, 8, 12. That's 20k.
Yeah.
Most likely you will get paid, but there is that little chance, depending on what prop firm, where they're either going to ban you, they're going to delay it, they'll come up with whatever shenanigans, and then you don't get a payout, or maybe they pay you a little chunk from it, and it's just complicated and it's long. Keep it below 9k. Trust me, you'll be sweet. You get your payout quick, and just be below the radar. That's kind of my advice on whatever account size you're doing, right? Because the moment you hit a bloody, trust me, if you hit a 40k payout, you ain't getting that. Or you'll get a fraction of it.
Not from some of them, for sure.
I mean, this is the prop firm industry, isn't it? It's all a bit shambles, apart from CTI, fortunately.
Yeah, just CTI, FTMO, 5%ers. The big names that have been around for a very long time, you can generally trust, and they don't.
More than half a decade, exactly. CTI for a good while, but all the other prop firms, just be careful. Stay below the radar, and if you make 2% on 400k, that's 8k chill. You want to trade it, up to you. I'm just saying, just trust me.
Yeah, and it's a really important thing, to make sure that you're following rules and you trade. Imagine you are a funded, imagine you're a prop firm, you're running a prop firm. So there's a question that's popped up here: why there's so many prop firm rules? Well, you're not going to give your money away to gamblers, okay? Because you're going to lose money and they're going to make money, and you need to make sure that you are working with the right people. So design your trading plan to keep a prop firm happy. As in, if you're taking 2% trades and you're looking for 30 R positions and you're losing, I don't know, 5 positions before you get one, you're not someone that is shown as a sustainable growth, because ultimately these prop firms, they want to hopefully book you one day where they can make money off your trades as well. So think about how they want you to be, and small risk, calculated risk, steady, consistent profits, shows longevity in your portfolio, and that's what prop firms want ultimately.
Yeah, exactly. And I think, just to summarize what you said, is they want to filter out professional traders from risk traders, and obviously the risky ones, they'll do high risk, high leverage, and expect a 100k payout. That's gonna, come on, that will just suck the profits from prop firms. The system is designed for professional traders. Filter out all the gamblers, basically.
Definitely.
That's why there's a lot of rules.
That's it. All right, well, that's us done for today. Good session today.
Awesome session.
Nice and busy. We like it. And thank you for those of you in the comments as well. Yeah, I've got to shoot off now, sadly. So, yeah, it's been a great session. Good to see you, Diego. Good to have you back. And I'll see you next week.
Awesome, 100%. See you next week.
Cheers.
Take care. Bye-bye. Bye, everyone.
See you later, guys.